Good morning and welcome. Patriot Radio News Hour, Joe and Jason. Happy Friday, baby. We made it through another week, and what a week it has been. The year of chaos. Man, is it living up to its name. Records, get ready. Records everywhere. The Dow, the S&P, the Nasdaq, they're near records. Gold, right near another all-time record high. We warned you. We warned you about what was going to come down. Jay Powell and Jackson Hole. Yes, he's, let's just say everybody get ready for rate cuts and more inflation. Our toll-free number, 800-951-0592. The website at allamericangold.com. Now, we've run some pretty cool stuff the last couple of weeks. Some people got a little angry when they weren't able to get what they wanted. It happens. Be cool. Be cool. It's okay. I told you we'll give you more chances. Today, I'm going to do it again. But this is on gold. And this is going to be the deal of deals. We're going to have a huge, huge sale on $20 gold pieces and $5 gold pieces. Quantities will be limited, but I will tell you this, the pricing will be absolutely outrageous, so get ready. Let me give you the number again. 800-951-0592, and after in the next segment, we'll get to what it is. And I'll just say this. That's why I love what I do. That's how great these prices are going to be. But Jay Powell, he came out. Jason, he did it. And he said the time has come. Yes, the time has come to adjust policy. So not only, he didn't even mess around. He didn't do we're going to wait on the data, but the data's looking better. No. The time has come to adjust Fed policy, and the pivot now complete here. And again, remember, he's not doing it because the time has come. He's doing it because they have to. This is the first time, because let's face it, in a normal environment, let's go with what they've told us. Just over the last, month, GDP second quarter, which is always a higher quarter, 2.8. For an economy the size of the U.S., that's big. Right? No, normally they complain about 2%, right? A lot of times 2.8, oh my gosh, the economy's getting ready to be too hot. And then we talk about raising rates. The jobs number, now the jobs have slowed. Let's not kid ourselves. And I know we had that huge revision for the last year, but the last, 3 months of job prints are all over 100,000. Now, are they going to be revised down? Probably, but still, right? How about retail sales? Oh, my gosh, retail. It was a shocker. Retail sales skyrocketed, they said. Now, nobody believes it because all the retailers are saying we're closing stores, but this normally wouldn't be a rate cut environment. The inflation rate, even their lying numbers. What was it, 2.9 core? It may have been 3. Headline was, 2.7, something like that? Way above the Fed target. But, Jason, the time has come to adjust the policy. And everybody, and I've been saying this for months. I guess I'm really good at this. I've been calling for a September rate cut for how long? And it looks like that's exactly what we're going to get, Jason, as, again, I think the markets are anticipating a massive amount of debt. I don't know if you saw the debt. Just jumped up another $100 billion in a day, right? And we haven't even sent out Social Security checks yet. Yeah, we're now $35.25 trillion. So we're back on the $1 trillion every 100 days. And I think the rate cuts they're going to try to help anyway. We'll see. Will it re-spark housing? Maybe. Could it re-spark autos? Maybe. We'll have to see. But it looks like this. Not only was it called for a rate cut in September, but saying more rate cuts are probably on the way.
Well, man, if he's going plural with rate cuts, maybe he sees something a lot darker than we see. That if things are going to crash and burn really hard here, I don't know, 6 months, that we're going to be cutting rates to stay on top of that, right? Because the so-called they'll stop talking inflation at that point, right, Joe? No matter what the inflation is, if markets are crashing and burning, then there'll be multiple rate cuts. It's interesting, Joe, because I was watching a little bit of the Democrat National Convention, and the governor of Michigan was on. She said, who do you want to be your president when this huge emergency happens later? She said it out loud. When a big emergency, a big horrible thing happens. They're saying on the national media now, they're saying some bad thing is coming, Joe.
Yeah, well, everyone should know it's coming. We'll be back. Get those fingers ready to dial. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up another crazy week in the year of chaos. The Dow up 430 points, back above 41,000 as Jay Powell has reversed course. We'll get to it in a minute. The S&P's up 57. The NASDAQ's up 220. The 10-year note back down to 3.8. 380. We'll see if it gets into the 3.7s. Crude oil's up $1.50. Gold is flying here, up 31 right now. This will be a new record high close. Spot gold, $2,517. The intraday high for spot $2,530. We'll see if we get there today, but as of right now, that will be a record high close in the gold market. Silver's playing along. Here comes silver. Is it going to break 30 today? Right now, up 78 cents here, 29.75. Be diversified. Get ready. This is really calling for a big change coming very quickly in this boom and bust cycle. The Fed trying to fend things off. It's never happened before. I don't know why they think it'll happen this time, but check out our friends at Y-Refi. We're at this is my call here. I think the top is going to be this year, wherever this is. Is it today, tomorrow, next week? I think we're really close to it. What the pain that comes after is what everybody is worried about. Check out our friends at Y-Refi. If you've got $50,000 or more, you can use an existing IRA. Some of you can use a 401k. Maybe you got too much money in the bank. Maybe you've got too much money in your money market accounts, especially after the rules change. Get up to 10.25% fixed rates of return, not correlated to Wall Street. Not reliant on Jay Powell trying to reinflate bubbles. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or just call them at 888-Y-REFI-24. So what is he so worried about? Because like I said, no more data watching. Not even I was expecting that, hey, things continue, there's a chance, a likelihood that we could cut rates. I was expecting something like that, kind of a soft shoe. Hey, we're probably going to cut rates, but just in case the data doesn't, gets, worse, we're not going to know. He said flat out, the time has come for policy to adjust. His primary concern, the cooling labor market conditions, is unmistakable. Makes me wonder how off is the government number. We know, remember we talked about from last April to this March, they said, hey, we're off 800. We said there was 818,000 more jobs than there really were. That's like 68,000 a month. Why do I get a feeling that maybe the last bunch of months here, the overstatement's even worse? It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. Now, that's a big statement. Essentially, what Jay Powell said is everybody getting paid more money, that's over. That's what he just said right there. Hey, you're not going to start making. Matter of fact, a lot of you probably need to worry about losing your job than you are about getting more money. Here's another interesting statement. We do not seek or welcome any further cooling in labor market conditions. Uh-oh. Jay Powell seems to think, Jason, that not only do we not have job growth, that there's job losses, and lots of them, to the point where he's like, hey, we don't want any more people to get fired. Interesting. I mean, the unemployment rate's only 4.3. Very interesting.
Lagging numbers, Joe. We don't know what he's looking at.
Well, I wonder what's coming. That's all. What does he know that we don't know? Remember, I keep saying there's something out there we can't see. What is it? Is this it? The time has come for policy to adjust. The direction of travel is clear. And the timing and the pace of rate cuts will depend on incoming data, evolving outlook, and the balance of risk. See, we haven't heard about evolving outlook. We haven't heard about the balance of risk. Right? So he's minimizing now the data. We will do everything we can to support a strong labor market as we make further progress towards price stability. And here's the key in this, in all of this. That Powell also noted the Fed its attention has shifted from its dual mandate. So remember, the Fed's got two mandates. One, full employment. Two, stable prices. Okay, we know Of course, isn't that a cute word, stable? Right? That's a nice word, isn't it? Because to them, well, if we just inflate 2%, devalue your currency 2% every year, that would be stable. Right? That's stable. We want to devalue. Of course, we know it's been way over that. But they no longer are worried. Well, actually, I should say they are now worried about the employment. So the focus now for the Fed does not seem to be inflation anymore, Jason. They're worried about layoffs. And so they're going to start adjusting policy. And this is why everybody there is like, okay, wow. Jay Powell's not talking about, listen, you don't say a policy change and get one rate cut, right? That's not a change in policy. It looks like they intend to lower rates multiple times over, let's say, the next 6 months. I think they're going to take the next meeting off because of the election. That's just my thought. And then they'll lower again in December, but we'll have to wait and see. But a big change in the employment, at least from what Jay Powell's talking about today.
I think what you just read is a quarter point rate reduction this time, next time, and a third time. That
could be.
It sounds like
I may be wrong.
Jay Powell just what you just read to me, because I listen to you read off his statements, all the time. What you're reading to me, and when I'm trying to always try to figure out what Jay Powell's groove is, this is more stronger language than he's used in a while. I think he thinks that inflation's good enough and is not worried if it comes back. That's what it sounds like, and that we're gonna lower rates and get this market humming. And the inflation. He's gonna say, "Don't worry about the inflation." He's already in that what you said. We don't have to look at this anymore. That's yesterday's news. That's what I just heard. And whether he knows it or doesn't know it, the inflation will come storming back. And I think he either knows and doesn't care, or he is ignorant to how bad it could be if he starts doing this. But I think we got 3 straight quarter-point rate hikes or reductions.
Well, rate cuts. Well, let me give you the next line, because this may be where I'm thinking there's going to be rate cuts in 2025 as well.
Yes.
The current level of policy gives us, here's the word, ample room to respond to any risk we may face, including, ready for this, the risk of unwelcome further weakening in labor market conditions. Not inflation? What about inflation? Are you worried about that? My confidence has grown that inflation is on a sustainable path back to 2%.
No. We're going to get inflation next year and money printing, just like I keep saying, Joe. We're going to get and whatever the big emergency that happens, whether it's a war or whatever thing that's concocted, the new president or whoever's in charge can say, well, all the inflation is because of the war. We have this inflation because there's a war. That's what's going to happen. We could see a lot of rate reductions. What you're reading, Joe, he was really coy the last year and a half, very quiet. And suddenly with this, he's like, okay, we're good. Inflation's yesterday news. Here we go. Reduce the rates and get that market going.
Away. I'm blown away. This is – I knew he would be dovish, but this was well beyond. And listen, they use words carefully. By him saying ample room, what he is indicating and telling his banker buddies and his Wall Street buddies is we're cutting, and we're going to cut a lot.
Yep.
We've got a lot of room. I'm not talking about 25 basis points, 50 basis points. Listen, this is $3,000 plus gold written all over it, right? We're seeing it in effect right now. And now all of a sudden, I guess these government job numbers, the first Friday of every month, are going to be must-watch TV, because he's acting like we're actually starting to get in trouble here with these layoffs. And I know that, look at jobless claims yesterday. It was only 232,000. Now, granted, that's more than 200, but that's not 270. That's not 300, which I always tell you, listen, when we get close to 270,000 or more first-time layoffs, you better start worrying. We're a long way from that, and yet here we are with the comments from Jay Powell. He has lit the lamp here, and dollar weakness now is going to be the new normal here. And, of course, the dollar, gold had rallied super hard with the dollar rally. Looks like we're going to have legs here again, because Jay Powell has said, hey, we've got ample room, expect rate cuts. Jason may be right. We actually may get 3 rate cuts instead of 2. The thing about it is he's put on deck a ton of rate cuts coming in 2025. Let's get to the specials here. Get ready. I've got 50 $20 liberties. Right now, gold is up $32, $25.18 at $650. That's $132 over spot. That's like a gold bar price. I've got 50 of them. I've got, by the way, that's $105 off today. You heard me right. $105 off. I've got 60 $5 Liberty. So all these 1866 to 1907. The 20s, right? That's the 1 ounce. I've got 60 quarter ounce. $665. You can get 4 or 5 for $2,660. That is insanity at its best. 800-951-0592. 800-951-0592. Patriot Radio News Hour on this Friday. It is just insanity as we're staring at new all-time record highs. We're anticipating a new record high close here for gold today. Silver getting closer and closer to being back above 30 now, about 16 cents now away on that. We'll see how the markets end. A policy change from the Fed, even more dovish than expected. They are telegraphing to the markets, we're going to cut rates, and we're going to cut it a lot, and we have ample room to do so. I think this is just laying the groundwork here. You know, most of the major banks now are talking, hey, by summer, we're going to have $3,000 gold by the summer of 2025. I think Jay Powell, at least today, by all accounts, that looks like exactly what we're going to see. This is the deal of deals. We've got one line open. It's going to go fast. I know you want to listen, but get this done. We had 50 20s. I don't know how many are left. $2,650. That's nuts, right? I mean, $130 over spot's $2,520. Maybe you know what? I'm torn. This $5 Liberty deal, I may do that one for an extra $10. You know, $665 on a $5 Liberty. If you bought 4 of them, that's $2,660. So you're only paying an extra $10 to get 4 quarter ounce coins instead of a 1 ounce coin. Here's the problem. I only had 60 of those. There aren't any more. We can't duplicate. We can't replicate. And, of course, pre-1933. These are 1866 to 1907. You can buy it, sell it, trade it in any amount, and you don't have to worry about a 1099. And, Jason, I think in the future here, because, boy, there was a chart out today, and it was just measuring what gold does when it's in rally mode. Going all the way back to, when gold started to trade freely in the 70s. The chart says that gold's going to be somewhere in the high 5s to low 6s based on history of what gold does. You got to remember, I wasn't around. I was just a kid. I was born in 1970. So, I don't remember Richard Nixon's speech and blah, 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 and the inflation and all of that. But I remember when gold was $250. I was here, pretty much. And the first run, right, it went from $250 to over $1,000. That's 4 times. Then it went back. It fell back to like $700. Right? Then it went to like $2,000. Right? About 3 times. Well, figuring out gold was like $2,000. 3 times is $6,000, right? 4 times is $8,000, but each time it gets a little bit less. So we're probably, unfortunately, are we going to see gold well above $5,000 an ounce if the trend that gold has been doing over the last 20-some-odd years remains intact? Jason, we could definitely see a lot more upside in gold than most people, I think, are counting on. I think 3,000, everybody seems to be comfortable with that number. I don't know why, but the chart says it's going to be a lot higher than that. But why would people be comfortable with $3,000 gold? It's crazy.
Yeah, we could see Christmas gold at 3,000. And so what are we selling them for today? What's that price on those 20s?
2,650.
So if Christmas gold spot price is 3,000, what are we selling them for in Christmas time? $3,500?
Well, it depends, right? If the premiums stay low, maybe 33, 32.50. If premiums aren't low, 35, 36, right? Yeah, it's a big difference. 800
premiums will come up by Christmas.
0592. They don't normally do. That's what we normally see here. By the way, we did get new home sales out. Guess what? Remember that little dip in rates they had? Spurred a lot of buying. Home prices up again. Are you kidding me? New homes now back above what they're going to see. I think this is a dangerous game. I really think the job market has changed. I don't think the rate cuts help it. I think the rate cuts will stir inflation again. It's going to be, listen, it's going to get wild. 2025 is going to get wild. It's just weird to hear him talk so negatively about the job market because I know we had a big revision and all that, but that was still, creating over 100,000 plus jobs a year. He's acting like there's a jobs recession and says, listen, companies are done paying you more money. That's another thing he said in there.
Well, and I've said it many times, I think the situation, because we've said for several years now, the Fed has no good choice, right? Lower, up the rates and crash the markets, lower the rates, and inflation goes crazy. And that's still there. So, Joe, I mean, the only real, long-term solution is to attempt. They're going to attempt to inflate their way out of this, which is something that's sort of happened before. If you look at World War II, went through 40 years of rising rates and rising and cost everything going up over time. What's it going to look like this time, Joe? And how fast is it going to move? You're talking 5,000 gold. Next year if things go a certain way, right?
Boy, I hope not.
These things happen. This is inflating your way out of things, Joe. And this is the game they're going to play. There'll have to be a massive emergency to blame it on. Who knows what that's going to be?
It's going to be interesting to see what happens with the deficit here. Because if Jay Powell's right and the layoffs are really going to come now, because that's what he's saying. Matter of fact, he says, listen, any more is unwelcome. If he's right about that, that means less people paying in, right? Social Security, Medicare, Medicaid, right, becomes a bigger deficit problem. And then, of course, the government's going to do what? They're going to spend more money because that's what they always do, right? Come up with this program, that program to try to get job growth. Whoa. Man, that's inflationary, right? I don't get it, but hey, let's take advantage of it. 800-951-0592, the gold special, probably of the year today. $26.50 on 20s. Incredible $6.65 on the 5. We'll be back. 800-951-0592. The phone line's just opened up. Just an update now. We're down to 25 20s at 2,650 on the $5 Liberties. We got about just over 30 of those left. So pretty much half is already gone here, and we're not even through the show. This is a huge opportunity here in the gold markets. Buying this close to spot, it's unheard of. Take advantage of it. We've got a good two-way market going. We got people that need money and people that need to add to their gold holdings. And so we've got a great two-way market, which is allowing for our prices to be where they're at right now. This is awesome. What a great opportunity when you think about, especially with Jay Powell's comments today. You know, that hey, we're not only is it a policy change, but now we're talking about ample room and insinuating more than a couple rate cuts, right? I think now comfortably 6, maybe 8 cuts coming between now and say this time next year, which gives all kinds of room for gold to run here. Silver's going to go with it. By the way, I don't know if you saw it, Taiwan. You know, they're one of our big allies, saying, "Hey, guess what? We're going to start buying gold again because we need to protect our currency." Malaysia, Indonesia, saying we want to be in BRICS. Right, the number every month, all of these countries is coming out and saying we want to be a part of BRICS. Vietnam just signed 14 different trade agreements with China last week. And then how about this? Do you know that Russia and China now are conducting 90% of all their business in their own currencies now? 90%. And then rumors circulating again. Matter of fact, it was yesterday on if you go back to yesterday, we were going to play a clip and we just never got to it. But speculation that Saudi Arabia has been silently amassing gold and saying that they're announced that they're ready now to start accepting the Chinese renminbi for oil. That's a big thing. Now, remember, up until about a month ago, they only could take dollars. They've changed the payment system and went to the Bank of International Settlements, which allows them to take any of what they say are the currencies that are, global currencies, if you will, which one in now, right, is the Chinese renminbi. On top of that, the BRICS announced, hey, we've got our BRICS bridge system. It's almost ready to launch, which will compete against SWIFT. Jason, the tables here are definitely set up for more dollar weakness. I mean, that's just the route. I mean, why do you buy gold here in the United States? Well, we're hedging against the dollar, and it looks like the dollar, right, is, and again, further slides here in the dollar, especially if Jay Powell's right, and all of a sudden he's talking about, hey, we've got ample room, we're going to make a lot of cuts.
Joe, they're going to cause more inflation, and they're going to print. And here's the thing, Joe. We know no matter what happens, when the new president takes office, there's going to be spending like crazy. It doesn't matter who it is or what the imagined situation is. There's going to be spending like crazy. And, Joe, that's going to be printing with lower rates. We're gonna have inflation, Joe. I mean, $5,000 gold for anyone listening. And Joe said it last segment. That's not a good thing for everything else that's going on. This is the reason you buy gold is because you're a pessimist. That's all there is to it. It's not bad to be a pessimist. You're just protecting yourself against things that could happen. Well, they're happening now, right, Joe? They're happening. So you better load up because we're talking $3,500 gold in the next 6 months possibly, Joe, just to buy one of these gold pieces that you can buy at $1,000 less almost today.
Yeah, it's something where as we watch the policy here and think about, listen, we're going to run what's the official debt number going to be at the end? I don't know, 2 point something trillion. right? And that was a good one. And now Jay Powell says we got to cut rates because the job market is faltering. And you start thinking about what is going to happen. How much more debt are we going to go into? You got to remember, right? The Fed is still buying mortgage-backed securities. They're still buying some treasuries. That's the other thing, right? I would imagine quantitative tightening is probably going to come to an end.
Yep.
Going to come to an end. The question then will be, are we going to see quantitative easing in 2025? Yeah.
I think so. Joe. I think printing's coming.
Because, right, someone's got to buy the debt. Someone's got to. Right? China's down to like $700 billion in treasuries. They had like $1.3 trillion. Right? They've gotten rid of almost half of them. Japan's in trouble, right? They were a huge buyer. They got to start selling, right? They're trying to defend their currency. Well, now the Fed is saying, forget about our currency. Let's weaken it. 800-951-0592. $20 gold. $26.50. I know. $5 gold. I think that's the deal of the deal at $6.65. Joe and Jason wrapping up the week right after this. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Friday, wrapping up the week here as gold staring down all-time record highs as Jay Powell at least shocked me. I mean, we knew he would be dovish, but this one was well beyond saying any more contraction in the labor markets will be unwelcome, and it is time to shift policy and saying they have ample room. So we did a few things. Number one, said, hey, the reason why we're going to cut rates is because the employment mandate. That's why. Not the inflation mandate, the employment mandate. So essentially saying we're done fighting inflation. I mean, that's just, sorry, but that's what he said. That's what he said. On top of that, announced, hey, we're changing policy. So he tells the markets, get ready, we're cutting. And then on top of that, use the words ample room. In other words, letting the market know, hey, this isn't a one and done. This isn't a two and done. This isn't a, we're gonna cut and wait and see. And then maybe we'll cut and wait and see. No, he's saying, Jason, they're just on cutting mode. That's where they're at. They're convinced that the labor market's getting ready to break, and this is why they need to give up on inflation. Of course, and let's face it. Hey, we're comfortable with the fact, we think eventually it will get back to our 2% mandate sometime later. And, of course, we saw already remember that Monday in Japan. And the Treasury market went nuts. Look at what it did to at least new homes. Right? Look at what the price did. This is the part I don't get, Jason. I think we're in trouble here. If he's right and the labor markets continue to soften, I'm looking at delinquencies on credit cards, auto loans. I mean, some people not getting paid their mortgage. Are they too late? And then are we going to have what we talked about, which is an economy that's in recession and yet prices still rising? It looks like that could be.
That's what I think, Joe. I said back in March when gold was just going from 2,000, pushing hard towards 2,400, kind of stopped there. I thought by July-ish, I thought we would see another push in gold. And now it looks like, well, it didn't happen in July, but I don't know. August, this might be August pushing into September. We could see gold prices pushing really hard again. Remember, leading indicator normally for inflation. And Joe, they're not reporting inflation, right? I think they're just going to lie about it now. I think they're just going to keep saying whatever they need to say because this is the policy they're moving towards because they don't have a good choice. And 2025 is going to be a wild ride for a lot of people, Joe. A lot of people are really going to really scrape hard next year. It's just the way it's going to be. This is the way it's built now. It's lords and peasants. We're heading for it, Joe.
We got 3 weeks plus for the next Fed meeting. It looks like we're going to see gold rising through that meeting, and then on that meeting, we're going to anticipate Jay Powell telling us when the next rate cut is going to be. Yeah, I mean, did we see $2,700 gold in September? 800-951-0592.